Landlords, what should you expect in 2025? How do we as portfolio landlords navigate the top 5 challenges and key changes that the government are giving us to deal with? And how does it impact our rental businesses in 2025? These issues are having an outcome where landlords are selling up, which creates an opportunity for landlords looking to buy. And it's amazing if we can match it together. The Renters Reform Bill is number 1. I have previously posted about this in my YouTube channel. This bill will see the abolition of Section 21 no-fault evictions, which I have to say, most landlords did use responsibly. Headlines of that bill are, let's talk about Awab's Law. Awab's Law implementation, where we have to make sure that we fix health hazards such as mould within a reasonable time frame. So this is going to be an education strategy for our tenants, but it is also something that we as landlords need to take seriously. So that is going to come into law. Tenants will have to have the right to request a pet, and the landlord will not have the right to reasonably refuse. Landlords will not be able to discriminate against tenants who have benefits or who have children. Most of us landlords have used Section 21 to serve a lighter eviction on our tenants, not paying rent or with antisocial behaviour. I know I personally have only used Section 21 once to evict somebody who wasn't paying their rent. However, we will now have to, when this law comes into play, evict tenants under a Section 8 notice. This means, and this is really important that people understand this, assured short-hold tenancies will be abolished, and we will instead move to a system of periodic tenancies. And we won't be able to evict a tenant for at least 12 months. We will have to go to court for possession on more occasions, and the court system is our biggest challenge in this. So it will be interesting to see how this works. However, I just want to caveat and put in brackets that they changed the law in Scotland a few years ago, and this actually went okay. Other things in the Scottish tenancy stuff has changed since then, but in terms of abolishing their version of what we call Section 21, it's actually not massively changed the possession of properties. In England, the reasons we will be able to go for possession will broaden. For example, non-payment of rent, it's going to be 3 months under the new bill instead of 2 where we could serve a notice to evict. It's now going to be 3 months. Possession of the property for the landlord who wants to sell the property or move in themselves or move a family member in. Now, I am going to say for example, you're doing really deep refurb of a property, you will be able to try and rehome that tenant somewhere else. But these are all reasons that are still going to be we're still going to be able to evict a tenant. There's going to be things like you can't rent it for 12 months if you've said you're evicting because you're selling it. So there's going to be things that are checks and balances that are in place. I am going to say though that responsible landlords do not have anything to fear from this. Referencing tenants properly should have been what you always do, and this is going to be even more crucial in the future. Referencing the tenants and asking for guarantors is still going to be possible, and I know a lot of landlords ask for guarantors if the tenants have low income, for example. What is the opportunity here? So some landlords are selling up. What this means is that for those looking to enter the market, there is a lot of opportunity to buy property from exiting landlords. Landlords are exiting due to some of the legislation, but they are also as landlords age, they come to a point sometimes where they sell off their portfolio, particularly if they own them in their own name, and they get to a certain age where the properties are unmortgageable. So landlords are always exiting. Good landlords with high quality housing stock and well-referenced tenants should see little change due to the abolition of Section 21. So number 2, there's a lot of changes here, so please stay with me, like and subscribe, and I'm sharing really relevant information with you here. Number 2 is the Leasehold Reform Act. If you own leasehold apartments, this is good news for you. I want to headline that. This is good news for you. Renewing leases and new leases need to be for 990 years, rather than in the past being renewed up to 99 or 125 years. At the next renewal, after this law comes into effect, the lease will be 990 years. It is law, but it hasn't yet been enacted. This is positive news for property valuations and mortgaging in the future, as short leases under 80 years are generally unmortgageable. So from a bank's point of view, the properties are going to be less risk if they've got 990-year leases, which are actually a virtual freehold. The value on the leasehold assets is now on the leasehold asset. It is not on the freehold of the building. Ground rents on new leases are a peppercorn. It remains to be seen how Labour will change the ground rent currently due on existing leases, but my prediction is that they will cap this at a lower level, because escalating ground rents have stopped people selling properties. Service charges will also have to be transparent. So you can't just, freeholders can't just add money onto service charges. For people owning leasehold property, this is really, really good news. And for people who title split property, this is fantastic news, because those properties, the title split apartments at 990 years, will now be eminently more mortgageable. So I want you to note the value on short leases is going to go upwards. So as you renew the lease to 990 years, that's going to add value to the property. And title splitting freehold blocks into 990-year apartments will create 25 to 35% capital uplift in the leasehold properties. Please link in the chat to our free video on making money from this strategy. Number 3 is energy efficiency, where we all know the targets need to be an EPC of a C by 2030. However, we do not yet know the final criteria the government are going to put on this and how it is going to be measured. The current EPC system is mooted as not fit for purpose. That is, the energy performance certificate system is not fit for purpose because it doesn't take into account the changes that are coming, where we're trying to make more low energy appliances, things like getting rid of gas boilers, all sorts of things like that. The current system rates properties from an A, the best, to a G, the worst. The current minimum requirement is an E rating, and it changes to a C by 2030. Because of the issues in the current system, it is expected that there's going to be a publication soon of the government's future home standard, and we hope this will provide more clarity on what we need to do. So for now, we should wait and see, and for landlords, please don't go running off spending the money on existing properties right away. Wait and see over the coming months what comes out to give us more information here. We personally in my portfolio are refurbishing new purchases to a current EPC of a C, but we are holding fire on other properties below a C until such time as we receive clarity. The opportunity again is that landlords with EPCs lower than a C sometimes do not want to do the work and will be looking to sell up. This creates an opportunity for landlords who are purchasing property to buy and upgrade the EPCs as part of their refurbishment process. So our advice is on cost insulation improvements into every property. You only do the new ones at the moment and hold fire on the other ones. The number 4 is an increase in stamp duty land tax, and I think it's really important that we understand that the headlines in 2024 did not tell the whole truth and nothing but the truth. The headlines in 2024 were that the Conservative government abolished multiple dwellings relief in June. And then on the 30th of October, the Labour government increased the SDLT on additional residential properties from 3% to 5%. So that means every property us landlords buy or property developers buy that's not our principal primary residence, we then have to pay an additional 5% stamp duty to what other people pay. This came into effect the day after it was announced on the 31st of October. In addition, the bands at which you pay SDLT will lower, meaning everybody, including first-time buyers, from April 2025 will pay more SDLT. However, the headlines did hide some bigger issues in the small print. For example, you landlords need to know, linked transactions can now be linked over time to mean that purchasing multiple residential properties from one entity to another, so this could be a builder selling a property to one person and then that person buying another property to rent out. This could be a landlord selling off a small portfolio of 5 properties to another landlord. Now the government are going to link them together and not in our favour. This is going to work against us. The buyer of the property will now pay tax at the highest rate possible for all of the properties added together, plus the additional 5%. So the easiest way to describe this would be using an example of 5 properties bought over 5 years. So in the past, they might not have been linked together, but from the 31st of October, they are now linked together. So this means when I buy property 1, I've paid 100,000 for that property. I then buy property a year later, I pay 100,000 for that property. That's then added to the first one to calculate the land tax for both, and so on and so forth. So if we bought 5 properties over 5 years at 100,000 each, we would have to pay the SDLT based on 500,000. And if we paid lower SDLT on the earlier ones, the HMRC will claw that money back, right? So we'd have to pay the higher amount. I'm going to give you an example in a minute. If the transactions were not linked by HMRC, then the SDLT on each £100,000 purchase would add up to 25,000. So 5,000 each for 5 separate purchases. And that is now and after the 31st of March, because it goes from SDLT on a 250 purchase on the 31st of March to a £125,000 purchase, right? Now, because they've linked them, SDLT would now be 37,500 up to the 31st of March and 40,000 in April onwards. The good news, that's all bad news of course, the good news is if that transaction is 6 or more properties purchased at the same time, it would attract a commercial rate of stamp duty, which is lower. Now that is at the moment, that's giving you a link. Now I want to say there's still amazing opportunity out there because rents are rising, not as fast as they were, but they are still rising. And capital is now starting to grow. So please do not be put off. Remember, this is an opportunity because landlords are exiting and newer people can go and buy their properties, and the landlords exiting, you also have somebody to sell your properties to. Thank you very much.